should help you with Chapter 3, Creating T Accounts. It should help you with the assignment for problem 3.4. It is not identical, it's close. And it's actually the demonstration problem that you'll find on page 23 and 24 of your study guide. But going through the process of putting it together should help you with problem 3.4. So the directions say to analyze the transactions for the month and record each in the appropriate T account. Use plus and minus signs to show increases and decreases. Carefully or identify each entry in the T account by writing the number of the transaction next to the entry. That's just for our own benefit. And then after we have all of the T accounts finished, we want to make sure they each have a balance and we create a trial balance. So this chapter, T accounts are new and a trial balance is new. So let's jump in. So we're going to go transaction by transaction and put our record each entry on the correct account. Okay, so this is the list of transactions, and then down here is the list of T accounts. If we were in the classroom, these would all be on an index card, and if you come to my help session on during the week this week, that's the way we're going to proceed with T accounts, just to give you a chance to physically see what's going on. Okay, so the book has given you empty T accounts, and we're going to decide which account goes where, and we'll also identify what kind of account it is. All right, so the first transaction is Anita Thomas invested $100,000 in cash to start the business. Remember, every transaction has at least 2 entries, always 2 entries. I don't think we've gotten yet to the part where we have a compound entry, but it looks like we're going to have one in this problem. Either way, the left side of the accounts will equal the entries that we put on the right side of the accounts. In the future, after this chapter, we'll start calling it debits and credits. All right, so back to Anita Thomas invested $100,000 in cash to start the business. One of the questions that you'll have when you do problem 3.4 is you won't know which T should be which account, and really it doesn't matter. But we definitely have a lot of action going on in our cash account all the time, so we want our cash account to be one of these bigger ones. Okay, so on her cash, we always, it's an asset, so we increase it on the left-hand side. So we'll just make ourselves a little note here. When we increase cash, it'll be on the left-hand side, and when we decrease cash, it will be on the right-hand side. Okay, so we Anita invested $160,000. So we're going to increase $160,000. Sorry for my poor writing. On the left-hand side, and then we have to have a matching $160,000 in the owner's equity account. So we're going to throw that down here. So owner's equity, and this will be a matching entry on the other side. So that's going to be $160,000 on this side. And so when we increase owner's equity, it happens on the right-hand side. And if we decrease owner's equity, it happens on the left-hand side. Okay, now we're supposed to make a note so we can refer back to which item that was. So we'll call that number 1. We'll call this number 1. Okay, we're finished with the first transaction. All right, the second transaction, Thomas Investment Counseling purchased office furniture for $20,000 on account. So we will need another, to open another T account for office furniture. We're going to use one of these smaller ones. So we're going to put this here. Office furniture is an asset. and we're increasing how much furniture we have by $20,000, and we're increasing our furniture account. So $20,000. This is number 2. This is just for our information. And we're going to pay for that later. So that's going to be a liability, which we will call accounts payable. And we're going to put accounts payable on another one of these longer T's, just because it's typical that we're going to have more of those transactions. So accounts payable, and we'll have an opposite of our $20,000 in office furniture, so it's going to have to be on the other side of the T. But when we're increasing our liability, that happens on the right-hand side. When we decrease our liability, that happens on the left-hand side. Okay, so we'll add our $20,000 here. That was item number 2. Okay, next transaction is we paid $7,500 for 1 month's rent. Whenever there's cash involved, I always do that one first because it's easier for me to understand. So we're paying out cash for the rent, so we're going to be subtracting that from our cash account. This is item number 3. And we're going to have a rent expense account, and we're going to put the rent expense down here. Again, no rhyme or reason really, just we probably won't have another rent expense, so there will probably only one entry for this T account. So an expense account increases on the debit side, the left side, decreases on the credit side, the right side. We already made our cash on the right-hand side of the cash account. So we know when we record the other end of that transaction in the other account, it's going to be on the left-hand side, and we're increasing our expenses, so that does make sense. Sorry, off the screen here. Okay, sorry, pretend that's a 3. All right, let's move on to number 4. We sold an investment portfolio to the Darden family and received fees of $75,000. Nice investment portfolio. All right, so our fees income account is going to be affected. So let's just put that down here kind of by owner's equity. So fees income. And fees income, again, it's a revenue account, so it's going to increase on the right-hand side like owner's equity. It's similar to owner's equity in that. Okay, so we earned money, so that is $75,000, increasing our fees income account. This is item number 4. And how did we pay? We sold an investment portfolio and received the fees, so they paid us. So our cash increases at the same time. So we made this entry on the right-hand side, so our cash is going to be on the left-hand side. So $75,000 goes over here. And we just make a little note that that was item number 4. Okay, continuing on to number 5. Number 5 says we purchased a computer for $2,500, paying $1,250 in cash and putting the balance on the account for 60 days. So this is a compound entry here. So we are getting the equipment that is, the value is $2,500, but we're only going to pay half for it up front. So first we have office furniture, but we don't have office equipment yet. So let's get office equipment rolling. So let's make that this one. That's an asset. So we will increase it on the left-hand side, decrease it on the right-hand side. We gained office equipment, and that was $2,500. This is item number 5 as a notation. Now here's the other part. So on the right hand side of cash, we paid for half of that. So we paid for $1,250 worth of the equipment. And we're going to pay the rest later. So our other $1,250 is going to be accounts payable, and that will be $1,250. And that is the other side of item number 5. Okay, sorry, I write like a kindergartner with this tablet thing that I'm using. All right, I'm going to stop the video here, and I'm going to create part 2 in a separate video so they don't become too long.